Hello, my name is Troy Emory, Managing Partner of TD Emory CPA and Associates. Today we're going to talk about the new tax changes in reference to businesses, LLCs, corporations, all the pass-through entities, and all the good things that are coming out as far as the ways to save you money on your taxes, especially you business owners.
Mm-hmm. She pays that employee taxes like she does. Now, whatever you earn every
When you say she pays the employee's taxes,
which means her taxes are deducted straight from the employee.
oh, she's a W-2.
Yeah,
Okay, got it.
And I'm self-employed.
Okay.
Now, let's say you make 1,000 every month. Out of that 1,000, you take away your transport and everything. There's nothing left.
Mm-hmm.
How do you pay taxes from that?
You mean on your income?
Mm-hmm.
I think what you said was your wife makes the W-2 income, right?
So,
And then you are on the same tax return, right?
no, I'm a self-employed, but I own a business.
Right, but are you going to file with your wife on the
Yes.
tax return?
Mm-hmm.
All right, so you are a business owner, and you had income, say, of $100,000, right? And you had expenses, at least $100,000, you said.
Yeah.
Okay. Do you participate in this business every day?
Mm-hmm.
You do. Okay. And just suppose, let's just make it a little different here. Let's just say that your expenses were $120,000. All right. And you work in this business every day.
Yeah.
So you have a loss of $20,000. So basically, that loss is going to offset some of your wife's income. Okay? But here's what you have to look out for. It's going to look awfully funny. You make $100,000 and you got over $100,000 of expenses. I can't say that that doesn't happen. It does happen sometimes. It does happen. You come up with losses. But on a Schedule C, make sure you can justify those expenses. Because if you can't prove those expenses, it comes to audit time, they're going to want you to prove it. And if you can't prove those expenses, they're going to disallow those expenses. And that's going to put you in a situation where you're going to owe a lot of taxes. So I would be careful of that. What in your case, what made your expenses higher than your income?
So I use my home as part of my business because
Okay.
so obviously the business pays part of the mortgage.
Okay.
I run a car for the business every day because when you're doing your audits and whatever you do, you're driving a car away. You pay for the car, you pay for fuel and all that.
Mm-hmm.
So that is part of it as well.
Because you're going to have high fuel costs.
Yeah. And the car itself, because you use the car for the business. You drive to everywhere with the car.
And you use the car, how often do you use the car?
Every day.
Every day, and you're traveling every day.
Yeah.
You got a log?
So, what do you mean?
Okay.
Log.
Okay. When you go from A to B, right?
Mm-hmm.
When you go from A to B in your business, course of business, you should be writing down how many miles you went, where you went, what was the purpose,
Yeah.
right? I'm just afraid your mileage is going to be so high that it's going to flag. It's going to be a red flag.
So,
Right. And the only way you'll get around that red flag is you have a log. You have something proving that you actually went to these places.
so I don't have the log, but I do have a schedule for each appointment. That shows where you drive from A to B and point.
That could work in place of a log.
That log will help.
A log is going to help. But if you got something to prove, hey, yeah, I went to these places, yeah, that's going to help you out. That's going to help you out. I would just be careful and make sure you can justify every expense on that return. So you just started the business.
Yeah, about 6 months ago.
Well, I mean, it's natural. Some businesses, when they start, they lose money. It's natural. Just if you do it three years out of 5, if you ever audit it, the IRS can say this is a hobby and not a business. Because nobody's in business to lose money, right? But your first year, as long as you're not showing certain categories that are hot buttons, like for example, I see people that have high meals and entertainment. Automatic red flag. Automatic. Who takes their clients out $40,000-$50,000 a year? They're only making $100,000. Some people try to get away with it, but that's an automatic red flag. Travel, high advertising. Advertising could be legitimate, but I see people try to bump that number up. Mileage. Just make sure you can prove you've been to those places.
Can you deduct your car payments from that as well?
Well, you can't deduct your car payment, but you can deduct the interest on the payment. You can deduct the interest portion, not the whole car payment. You can depreciate the car, but you can only deduct off the interest. I know you said the company pays for the car, but you can only deduct off the interest. So if you go back and do your calculations, you may not be in a loss position.
So this is where this car is what makes the business. Without a car, you can't go.
That's true. So you can depreciate the car, right? You depreciate the car, and then you get the interest deduction as well. And if you you got to choose. You got to choose. You can say, okay, I can do mileage. Is the mileage still 55 cents a mile? Still 55 cents?
I have to check with this for next year.
Roughly 55 cents a mile. You might want to say, okay, I'm just going to do my car expenses based on mileage. So you got a choice. You can do mileage or actual expenses. So sometimes mileage, most of the time mileage comes out better than actual expenses in most cases. But if you're going to put mileage on there, you've got to have the law. You got to have the law. If you choose to do actual expenses, then a law is going to be beneficial. It's going to be beneficial for you, but it's not going to be as important. But just watch it when you go over. When you go over, just make sure you can substantiate the expenses. That's all. We see people trying to do it year after year, and that's where the real problems are. And they see a repeated pattern. One time, 2 times, you might be able to get away with it. But if it's a repeated pattern, it could be trouble.
I hope you enjoyed the video that you just watched. If you got any questions or comments, please contact me at tdecpa.com or 301-474-1040. Thanks, and hope you enjoy your next video. Don't forget to hit subscribe so you won't miss my next video.